All right, guys, as we wind down May 30th, Thursday, couple head fake patterns in a market that fakes out traders all the time, the NASDAQ, the NQ. All right. But some interesting rejection and some strength that had to figure itself out and then had rejection. Look at the right side of the screen. And at this point, you had maybe some buy stops. Keep looking at it at 60 even, 61 even. They go up and quickly come back through the middle before they dance all the way down in here to support. You got to be able to say that it's a head fake so you're not bearish all the way down here because it's too late. Then they do something that oftentimes they'll do. They'll head fake back through the middle. Now, there's still buy stops above 61. Why? Because think of, if you're short in this chop, it's obvious that I'm going to put my buy stop above 61, right? Just think about it. If you're short from in here, you're going to look at this and say, I'll put my buy stop above here. That's where I'm wrong. If it's obvious for you, it's obvious for everybody else. So just watch this as it moves back through the middle of this consolidation. Sure, I'll draw a shaded box. The middle of it is not arbitrary. Once it glides through the middle of it, it gets bullish again. And there's no surprise that you're going to take out the top at 61 at some point. There should be no surprise that the market gets strong. Then it does a quick chop in here, 2 or 3 point chop. Same thing. Buy stops above 65, right? So you could be bullish before it's bullish and bearish before it's bearish with this pattern and these boxes. They work a lot better in the NASDAQ or in a thinner market, but you always should know where your consolidation congestion boxes are. Now, here's what's interesting. I was bullish all in here and then walked away. And when I came back, it had done this. Before it really broke hard, I seen kind of a top of the mountain pattern, which shows you a quick move, in this case, off the highs. So if people watching this in the future, I try to say things so that you remember it. Here's a great metaphor. Back in your days of trying to get girls' phone numbers, if you're talking to her, and she kind of likes you, you're not really sure. I don't know if she's liking me or rejecting me. And then all of a sudden she slaps you in the face. Now, there's no gray area there. She's rejecting you, right? This is a slap in the face moment. Back in your single days when you were trying to get phone numbers. So that gets you bearish maybe before the market gets bearish and before you see all this weakness. A rejection, upside down V or a mountaintop could give you a sense that because it happened quick, think of the logic of this. Because it happened quick in here, people who are long from down in here with money into the trade didn't have time to get out and they're mad. People who want to fade it didn't have time to sell it, so they're mad. So if you still have long stuck and you don't have a lot of shorts because it didn't give them a chance to get short, then you don't have a lot of buyers, which makes it easier to go lower. All right. And it's just the beginning of trying to create an objective bias and trying to get a feel of where other people are stuck. And you see all these swing lows, and we talked about, they're not going to hold these swing lows forever. This massive selling came in, doesn't surprise anyone. And then right at 10 o'clock Central, oil came in a little bit more bearish than expected. The inventory number came in on Thursday at 10 because of Memorial Day, and it helped accelerate this downside right after 10 o'clock. So if you were bearish in here in the NASDAQ and you're not watching oil for a little bit of a head start because sometimes they correlate together, then you're not truly keeping your eye on what matters, because this was helped. Yeah, NASDAQ and the stock indexes were probably going to go down, but oil helped push it lower in this particular instance right after 10 Central. This number came out at 10 on Thursday because of Monday's holiday. So that's really important to watch when you're looking at patterns that have to do with order flow. It's what head fakes are all about, getting people quickly trapped, right? Creates follow through and continuation. And that's how you could anticipate better. And that's all we're trying to do is anticipate better. You see how this resistance works, right? And then when they get through it, how some of this support works, it works in there, comes in here, jumps. Man, they get through this one, but they hold this one pretty decent. And this is a NASDAQ, right? And as we go through the real time, what would get you bearish, right? What would get you bearish in this particular sequence? Nothing easy. So I'm not going to say, hey, every down move is easily anticipated. Don't try to anticipate every move up or down. Well, what can I have done to find? Maybe nothing, right? Maybe nothing. Don't make it so complicated. All right. It's just you try to be bearish before a fifth grader would. A fifth grader is going to say, Mommy, it's bearish. Well, it's 34 even, Johnny. It just came from 54. Of course it's bearish. Keep your eye on the ball, look at simplicity, and don't take for granted the things that you know when you learn them in here, because most of the rest of the world doesn't know it. They want to be Fibonacci experts.